Rocket Lab, ticker symbol RKLB, a blow-off earnings last night. The stock up 25%. Should you be buying it now? Well, you know my thoughts already. I'm a value investor. I love space. I love Rocket Lab. I've talked about it before. We've ranked #1 for this. Not for a while, though, because I've not been covering it. But in this video, it's an extensive video, so please watch to the end. I'm going to provide you with the full analysis, the reaction from last night, earnings. Please tap the like button, consider subscribing, give us a subscribe if you are interested, because in this video we're going to take you to the moon. Literally, we're going to take you to the moon right now, and I mean that. So if you look right here, we're literally going to take off, analyze the stock, and if we're lucky, if we're really lucky, as we zoom through space, we're going to land on the moon. We're going to make tons of money, tax-free. And you're going to notice the reflection of me in my mask. Have you ever noticed that? It's a little bit of a secret there. Not many of you ever noticed the little secret code there. But anyway, let's see if anyone picks it up today. We're going to go through the analysis of the stock. We're going to share you the intrinsic value. We're going to show you the balance sheet. We're going to show you the debt position, the growth, whether you should buy this stock or not, inside trading, who's short in the stock. I'm also going to give you information from paid services, which you can't get hold of unless you have all my software, which I'm going to give to you today. Watch for the links. I'm going to give everyone a free trial, everyone discounts, everyone some free plans for all this software as well. We're going to look at the forward PE and see where that goes. We're going to look at all the grades and so on and so forth. So you can make an informed decision of whether this is a company to buy or own or trade. They are very different concepts. Okay, so let's have a look at it, shall we? Let's start off with it. We're going to start nice and basic because we want to start very straightforward and then get more into it. A lot of people are now discovering Rocket Lab. We've been covering this now for a couple of years, but we're going to start basic and then go through it. I don't make apologies for that. You know, we want to start simple because investing is simple, really, and then go into more in-depth as we go. So let's bring it on the screen. What is Rocket Lab? Not everyone is fully aware of it. Often people say Rocket Labs, and it's Rocket Lab. I do it all the time. Rocket Lab is an aerospace company, not just about rockets, which engage in the development of rocket launch and control systems for the space and defense industries. It operates with the launch services and space system segment. The launch service segment provides launch services to customers on a dedicated mission or ride share basis. The space systems segment consists of spacecraft engineering and design services, spacecraft components, spacecraft manufacturing, and non-orbit mission operations. The company was founded by Peter Beck in 2006 and is headquartered in Long Beach, California. The listed name is Rocket Lab, RKLB. Okay. Now then, we are working on a Meet the CEO with Peter Beck. If you'd like Peter Beck on the show, this is how we do it. I never go to the CEOs. I never invite them at all. You do it. And some of you have already done it, but you need to do it in mass for them to come onto the show. It's how it works every time. We've got a CEO coming up shortly. We've had many in the past. There's more coming up. How you do it is go to investor relations, email them and say, Martyn Lucas would love to have you on the show. I am an investor. Say you, not me. You are an investor and you would like to learn more about the company in this impartial interview. Martyn Lucas does not own the stock. He's not pumping and dumping the stock, not trying to get views or anything like that, just to bring great information to people about great businesses. That's what I do. And we often rank #1 for the stock. So tell them, get involved. And once they reply to you, then you can put them in touch with me and we can arrange for them to be on the show. Anyway, that's very important that you do it that way. All right, so get busy and you could actually do a default email of all the stocks you own and send it to all the investor relation managers for all the stocks and build up relationships and let me know and we'll get them on the show. We'll promote your favorite stock. 1,650 employees, founded in 2006, 35% maintenance. Now, we want to mention that. That's very, very important, not to overlook that information there. That tells you that brokerages regard this as relatively low risk. The S&P is 25%. And if we compare that with Virgin Galactic, for example, another space stock, important comparison, if we compare that and we zoom in, if you are buying this on Robinhood, it's got a 50% maintenance requirement. So you can see the difference between Rocket Lab straight off the bat and Virgin Galactic, not to be confused. These are both space companies, but very, very different companies, behave very differently, very different outlooks, very different strategies and growth going forward. The volume, average volume is 13 million. It's quite low. It's not sexy, not really sexy yet. Not a lot of people talking about it. Enough people talking about it, but not enough. This is about to get a lot more popular going forward over the next few years. All right, 13 million average volume. Today's volume, obviously 24 million. A lot of people got excited about last night. We've just heard from one of my members, Usman, I just bought Rocket Lab. He just bought it at a high, 24%. Should he have done so? Well, I don't think so, but we'll come on to that in a minute. Remember, at the end of the day, I am not going to tell you and get behind a stock and get all excited for you because people love that and they'll watch videos. If I do that, do it then. Make some money for yourself. No, I did that at the beginning. I used to champion stocks like it was a fan club. I was owning Virgin Galactic, so I said Virgin Galactic was great. And I believe it could be in the future. However, since then, I've learned to consistently make money. I never lose on trades. I've never lost since January, since I rebalanced my portfolio. And I'm here not to pump and dump a stock or even promote rubbish, but I am here to share my opinions and give my honest opinions. And trust me, I've done very well. 19 trades, 19 wins. I'm now at 131,000. I've got 200,000 invested, all from $5,000. So I'm giving you my thoughts, I'm not championing the stock so you all rush out and buy it and we can pump it up. Other YouTubers will do that. Go and watch them. I don't do that. I'm here to help, not to promote and pump a stock. No matter how good this business is, it's not a business at the moment, but it soon could be. That's the truth. It's a great product. I don't think they've hardly failed, actually. They've had a couple of false starts, but then they've gone up again. They fixed the problem, gone up again. Their record of safety is unparalleled. It's phenomenal, way better than SpaceX, but it's a great managed company, and that's what you want. When you buy a business, you are buying. We'll come on to the PEG ratio in a moment. I'm seeing someone mention that in the comments. You are buying the business, the company, the people that run the business, Peter Beck, the people that work there. Are these people driven to deliver? Because no matter how many times we've reviewed stocks, we've learned time and time and time again from the companies that the people let us down. They take the money, they promote the stock, they lie. SMCI, false banking, Fisker, Tilray, all kinds of businesses will poop all over the shareholder and ride off into the sunset. Virgin Galactic, for example. We don't want that for our investors. So the company is price earnings ratio is negative right now. Okay, seems really, really extremely cheap. Well, it's because it's losing money. It's not making any money right now. Will it soon? Well, we'll come on to that in a minute. 7.2 billion market cap. High today, 1874. High, 52-week high. We're at a 52-week high. Is it wrong to buy an all-time high, a 52-week high? No, it's not actually. No, it's not in principle. But that doesn't mean it's right to do so. We'll come on to that in a moment. Anyway, let's look at who's buying. Now, this is normally, I'm not really focused at all on the Robinhood buyers. And let me tell you why I say that. I'm a Robinhood investor. We're all Robinhood investors. I get it. And by the way, if you want a Robinhood free stock, we're giving away 5 stocks today in the US and in the UK. So there's my Robinhood USA. Sign up, get free stocks up to 5. If you click on I've also got a UK account. If you click on the UK account, it's in the chat there. I'm making this during a live video. You can get 5 free stocks in the UK as well. So take advantage of that. Robinhood investors are buying on trends. I am not interested in that. That doesn't move the stock. What moves the stock, and this is why I have friends on X and Instagram, and I interview CEOs. I often get criticized by gamblers, people that bought FFIE. Remember that guy, Omar, with his millions of followers, who was praying to God to protect them from all their gambling? Absolutely bonkers, not good investment advice at all. But he makes money to crap on people. It's not what I do. I'm interested in talking to the hedge funders, talking to the managers. I was criticized for that because they say, oh, Martyn's only friends with the hedge fund managers. You're damn right I am, because they're the ones who move the stocks. They're the ones who manipulate the stock. And I want to know what they're doing, not what a bunch of Robinhood investors are doing, because we can't move the market, can we? Let's be honest. Let's know. We're nothing. We're nobodies, all right? That's just reality. Robinhood investors have been buying it recently, getting excited about the earnings. Great. They got enthusiastic. Great. Nothing wrong with that. And they were right to do so. But that's not why the stock is up so much. So that's interesting. Hedge funders have been trimming. They've been buying, but in smaller levels on Q2. It's been reducing. They're overbuying. They realize we've got to stop buying this. We're buying too much. Reducing. What about insiders? Insiders were selling. Insiders were taking profits. So where do you want to get your advice from? The people that work there, the stock market itself, or people sat on the toilet playing on Robinhood? I know who I want to speak to. I want to speak to the insiders. I want to have Peter Beck on the show. I want to talk to the hedge fund managers, which is what I do, which is why I've got $131,000 and I'm making money and I never lose on my trades. I'm just being frank with you. Okay, let's scroll down and let's look at the earnings. Does it justify this 20% rally? I'm going to give you a spoiler alert before I come to the numbers. No, it doesn't. No, it doesn't. Insiders recognize it. Hedge funders recognize it. Wall Street recognize it. Robinhood investors don't care. They'll buy it anyway. Okay. It's a great product, great potential business, but got overbought last night. If we look at the earnings, it's actually not that good. It beat on earnings because the expectation was so low from the previous earnings. We know why. There was a delay and there was a few issues. It got fixed, but nevertheless, it was a blow-off earnings, which was great. However, they were expected to lose 11 cents a share. They now are losing 10. They're still losing money. And in a moment, we'll look at the debt position. What's their debt position, knowing that rates are coming down? Let's talk about that. So was it a great earnings? Not really. It was the worst earnings since Q3 of 23. So why is everyone buying it? Well, they're not. You are. Hedge funders aren't. Insiders aren't. Peter Beck selling it. What's going on? Do you listen to them? Or do we gang up together and go, let's stuff it to the man? Well, the man always wins, so I'm not interested in doing that. So it was okay, and it blew off a very low expectation. So should we be buying it this morning? Let's carry on and look at the real numbers now. Okay, we've got a few things to look at. We can start off by, first of all, if you want to access this, by the way, this is Seeking Alpha Pro. I have it. I pay a lot of money to bring it to you. If you want Seeking Alpha, there is Seeking Alpha. Free trial for you to use it, discounts for you to use it. You want to go and use it. You want to go and take advantage of a free trial, because without a referral, not just my referral, anybody's referral, you can't get a free trial. You can't get a discount. You want to try it, right? It's obvious. Let's look at it. Well, Seeking Alpha analysts are saying it's a buy. Should we listen to Seeking Alpha analysts? No. Who are Seeking Alpha analysts? People like me. I'm a Seeking Alpha analyst. I'm not saying rush out and buy it right now. I haven't analyzed the stock. I'm doing it with you now. Should you be buying it at the top? I don't know. We'll come to it in a minute. Seeking Alpha analysts are mainly broadcasters on YouTube that write for Seeking Alpha that get paid to do it. It also promotes their YouTube channels. Do I care what they say? 9 times out of 10, no. What's the qualification? None, other than I want to promote my story and get paid. Let's take that out of the equation. Okay, they're confident. A lot of people buying it. Okay, But would I buy it? Would Warren Buffett buy it? Let's have a look. Wall Street are quite keen on this, and we'll come on to that in a moment. However, the numbers, the quant, the AI software is a hold, not a buy. That's more based on the numbers than the emotion. Worth looking at. Now then, factor grades. The valuation was B minus, now at B. Bearing in mind this was last night. We haven't. We'll get the valuation figures when it pumps up today. That will change. However, B. Growth. A minus is improved from F previously. Great. D minus, profitability, still no change. Now, as an investor, you want to buy something that's making you money, right? I assume. At the end of the day, it's still not making money despite everything that's going on. What does that mean? Chances are they'll dilute and take your money out of your stock. Will they? I don't know. We'll discover that in a minute. You've already seen insiders selling. So just bear that in mind. Very, very important. Momentum, A+. Momentum is gaining momentum, A+. Good. Revisions, C, slightly down. Okay. Let's go over to, I've got some news for you, but I also want to show you the forward peg. Now you can't we can't talk about that because if we scroll down here, peg, we're not making any money right now. The valuation cannot be calculated, right? So we're not interested in that. We're not making any money at the moment. Profitability is D minus. Gross profit margin 25%. EBIT margin negative 52%. Net income margin, negative 54%. Return on equity, negative 33%. And return on assets, negative 14%. So if you like this information and you want to get all this and you want to dive deeper, there is my Seeking Alpha. You might as well get a free trial. If you watch to the end of the video, I will give you all the links that I'm giving everybody in the chat. Let's look at the news right now, and then let's go dive deeper in the analysis, which I'm going to say for those of you that are bothered to watch to the end, because real investors would have watched the whole of this analysis. This is the report just out. Okay, this was out just a few hours ago. Rocket Lab soars to new high after earnings topper. Strong guidance. That's what we're interested in. That's what investors buy. It's the future of the stock. Should we buy it now or do we wait for a pullback? I'll make my final calculation in a few moments. Rocket Lab rallied in post-market trading. I'll make that a bit bigger for you. On Tuesday, after showing off even more growth potential with its Q3 earnings report. The company reported revenue increased 55% year over year to 104.8 million. During the quarter, Rocket Lab signed several new Electron launch contracts with a total value of 55 million, demonstrating an increased average selling price of 8.4 million and showcasing a 67 pricing increase since the rocket's debut launch. Good. Total operating expenses were 51.9 million versus 38 million a year ago. Total operating expenses were 51 million over 38, spending more money. EPS was reported at 0.10 versus 0.11 negative consensus and 0.8 a year ago. So in other words, we are losing more money. 0.8 a year ago, we're now losing 0.10, but the consensus was 0.11. Again, the expectation was very, very low. So is it really that good? Well, let's look at it as investors, not as fan clubs and excited and let's buy it sat on the toilet looking at our Robinhood apps. Looking ahead, Rocket Lab sees Q4 revenue of between 125 million and 135 million. GAAP gross margin of between 26 and 28%. And non-GAAP gross margins between 32 and 34%. We expect to close out the year strongly with more Electron launches scheduled in November and December, alongside continued progress across neutron and space systems, highlighted CEO Peter Beck. Okay, there's the general news. Now let's move on to some more advanced looking at analysis now. Please tap the like button if you like this so far, and consider subscribing to the channel if this is what interests you. But now we're going to go over to my other analysis platform, which is Alpha Spread. And I'm very lucky and proud to say I know the CEO personally. So there is my link to Alpha Spread. All my members get a discount so good that it makes my membership for free. The link's in the chat. Everybody else will get the link later on in the video when it comes out. Or if you're watching it now, later on in the future, makes sense, it'll be below in the description and pinned to the top. The intrinsic valuation, $7.20. Base case. Overvalued by 60%. Now, as a value investor, that doesn't lose on trades. I never lose on trades. Since January, I've never lost on trade. 19 trades, 19 wins. I am looking for valuation. I am looking not to sell videos. I am looking to provide the best service that I can go to bed at night and go, I did good by my members and my viewers. Did it get me many views? Did it earn me money? I don't care. I don't need to blow off the video. What I do want is to provide a service. The intrinsic valuation is $7.20, $18 right now. Too expensive. Now, I'm able and I'm okay with paying 25% overvalue on a growth stock, which this is, okay? But am I prepared to pay 60%? No, I have a rule and I won't change it. Don't change it for anyone. I'm not going to do that. 100% not going to do that, because that's when you make mistakes, when you chase a stock. So, but the intrinsic valuation is too simplistic. If you look at that, make a valuation, you won't buy it or you won't sell it or whatever. It's not enough. We need to go deeper. Let's go deeper. Let's look at, we've just covered the earnings. We don't need to do that. Let's look at the revenue. Now, the revenue is up 16%. Okay, and we are moving up and up and up and up and up. But this is good. These are the expected estimates. Is there an S-curve there? Not really. There's growth, but there's not an S-curve. There's not an expected explosion. So can it justify a 25% overnight pump? I don't think so. Will there be some trim-offs? I expect so. Insiders are selling it. Peter Beck is selling it. Institutions are buying less of it. Robinhood are buying more of it, as in sat on the toilet investors like us. So where's the money going? Well, the money's saying we're taking profit because there's no S-curve. There's growth, good business, potentially, but not yet. Operating income up 0.3%, pretty flat, expected to increase. Net income up 2%. Not amazing, really. Going sideways, expecting it to increase. Financing cash flow down 1%. Investing cash flow up 16%. Operating cash flow down 9%. All right, let's look down to my another favorite metric. This one over here. What's the standard of the business? 1.2 billion. 1.2 billion in assets, of which 496 is cash. That ratio is good. Too much cash, we don't want too much cash sitting around doing nothing. You're just buying a bank. You can do that yourself. So we're not interested if it's too much cash, but we do want them to have some cash. We want them to be cash rich, but not cash, greedy. 496, we've got a bit of cash. But that doesn't mean nothing until we look at the debt position. The debt position, long-term debt, short-term debt. Well, we've got long-term debt of 409 million. So we've got 55% of our liabilities are debt, not projects moving forward, doing great things, but just sitting there, costing us money. Now, we've learned today from the inflation figures. It's why I covered it at the beginning of the show. You might want to watch it. If you watch it, rewind this or watch it later on if you missed it. I'll put a link to the inflation. Inflation, overall good, but a slight wobble, perhaps moving up in some areas, means we're not going to get rates cut as aggressively as we'd hoped. Not as I'd hoped. I didn't say we're going to get a half on the last one. I said a 0.25. I think we'll get a 0.25 in December, and then I think the Fed will wait. However, things could change because of Trump coming in. Things could change. However, Trump can't fire Jerome Powell, and Jerome Powell isn't going to resign. So that's all a bit of noise. That's not going to happen. But we don't know other things that are going to happen. But what we do know is rates aren't going to come down off a cliff. So that debt position they've got is going to remain expensive. And it's 55% of their liabilities. 409 long-term debt. They've got 496. So they can't pay off all their debts. It would leave them, yes, they can. It would leave them $96. What would it leave them? About $88 million it would leave them if they paid all their debts off. So their balance sheet is okay, but not amazing. Okay, scroll down. Now, this is the issue with Rocket Lab. I'm not buying a sexy rocket. I'm not buying a sexy product. I'm buying a business. I don't buy anything that I can't own forever. That doesn't mean to say I won't trade it. In October, 19 trades, 19 wins. I never lose on a trade. I'm currently in Coca-Cola. I went all in. I bought $28,000 of Coca-Cola. I'm about to buy another $8,000 of Coca-Cola on January the 1st. I can own it forever, no issue, but I'm trading it because it's on my IRA tax-free. S&P, I never sell. So I don't buy a product, I buy a business. It makes 25% gross margin. That is not enough in this sector. If you compare it to the competition, they've got a very good track record, safety record, but is the gross margin that good? Well, no, it's not. The operating margin is negative 53. They're still investing. I understand. They're still putting money in. I understand, but is it a good business? 53% negative. Net margin, 54% down. FCF margin, 46% down. ROCE, 22% down. ROIC, 27% down. Now, if some of these figures don't make any sense to you, you can open up the full explanation of these if you use my software, which you can all get for free, or the pro version with a discount so good it makes my membership for free. There is the link in the chat. I'll give it to everybody watching the video later. Or not later if you're watching the video now. Makes sense. Scroll down. Now, here's the issue. Profitability is 30%. I buy businesses that make money. This company is making 30% profit. Not good. Is it going to improve? Yes, it is. We've got 3 minutes to go, and we're just the stock is just going up. It's going up. I'm going to make a prediction now, and this is only a prediction. I don't know what the stock's going to do. I've got no idea. I think there'll be a bit of excitement as Robinhood investors wake up this morning. There'll be a bit of buying. It'll look sexy and attractive, and then it'll take the profits will be sold off. That's what I would do. Would I be buying it now? I wouldn't. But if I was trading it like you, I can jump in this, and I would have a stop trail order running. Remember, that only worked when the market opens in 3 minutes. A stop trail order, and I would put in something like 1% drop to allow it to drop 1%. So I'm already making money, guaranteed. And as it moves, I will increase the 1% drop to 2%, 3%, 4%, because I want to remain in the stock as long as possible, but guaranteeing I'm not going to lose. But remember, a stop trail order is not a guarantee. If the stock moves really quickly, they can't close the orders. It's why some brokerages, not Robinhood, offer an insurance on that in addition. You don't need that unless you're buying millions of dollars, billions of dollars. You don't need that. But just worth mentioning, right? If I was buying this now, okay, I get in, I set a trail order, which only operates in the next 2 minutes when the bell opens, won't operate before, and increase it quickly. As it goes up, cancel it, make it a 3%, cancel it, make it a 4%, give myself some movement. But don't be surprised if it runs for a little while and then tanks. Okay, let's carry on with the analysis just before the bell goes, so you can get all this information before the bell goes. Solvency, 40%. So the company isn't going bust. Look, everything's great, but it's a rubbish solvency. It just means it's not going to go bust short term or mid term. You can buy this knowing it's not going to go bust in the near term, okay? But it's not a great business. It's a great product. Downside, 72%, worst case scenario. Downside, 56%, worst case scenario. Downside, 36%, you know. So when we saw Wall Street earlier giving that analysis on Seeking Alpha, saying it's all great, that's not what they really mean. That's why I look at quant, not what people are saying. I'm looking at what people are actually doing. There's a difference. Insiders, selling, more. Peter Beck, selling. I can bring up the individual trades if you want to, but we haven't got time because the bell's about to go and so on and so forth. So I thought I would just bring you that as we come into the bell. So let's go back to the live trading position. It is up. Let's turn it green. Let's be fair and give it a chance. Tap the like button. We are coming to the end of this analysis. We are live going into the trade. The bell goes in 45 seconds. So everyone stay with me. We're about to ring the bell. Let's watch what happens. Inflation was a bit of a concern today. That's why we popped up before and then we sold off straight into it. The inflation was a worry. That's a worry for Rocket Lab. Let's see what it does. And if money moves back into Coca-Cola, that'll tell you where the markets are going. Coca-Cola is taking a dip at the moment, which is perfect at the moment because I want to buy on January the 1st. The bell has gone. Okay, there is the run. It's running. At the moment, it's right on where it opened. So if you'd set your 1% stop trail loss, you may have lost your money. And here it goes. And here it goes. It's starting to take profit. You'll be out now, but you would have not lost any money. How quick will it move? Let's see what happens. Keep paying attention. Pay attention. Let's watch this for the next couple of moments. It's quite exciting. So we will look at it for you. I hope all my members are making money. Never lose. Always make profits. That's what this show's about. Tap the like button and consider subscribing to the channel. Let's watch. 31, 32. Your stop trade order would have gone out at 1%. Remember what I said. Adjust it as it starts to move. As it starts to move, you can trim on it. Adjust it. Let's read the comments coming in live as it's trading. Rocket Lab is rubbish. Fight Channel. Rocket Lab is rubbish according to Fight Channel. Good morning all. Hey, I make my best trade on the throne. Yeah, Warren Buffett's always sat on the toilet making financial decisions. Thank you, Martyn. Great analysis. Was going to buy for long term, but gonna hold for now. I'm glad because I've saved you some money. Straight off the bat, I've saved you some money because it's just trimming off at the moment. But I don't know what it's going to do. I've got no idea. I'm basing my analysis purely on fundamentals, facts, not hype, not emotion, none of that stuff. Now, folks, if you want Rocket Lab to trend, if you want Rocket Lab to get seen by everyone on YouTube, there are 105 of you watching right now, and we've got 15 likes. If everyone taps the like button, this video will be suggested on YouTube. I will end it in a few moments' time. I'm making this during a live video. I'll end it in a second. 105 watching, 105 watching, 104, 103, 41 likes. Only 50% of you are signed to Google. If we can get the likes up, we're now at 41 likes. Come on, let's get it moving. Let's get it moving. Tap the like button. That'd be great. Back to the stock. It's holding on that point. It's not really sure which way to go. Financially, it makes no sense to buy at this valuation. It's too expensive. Would you pay $100 for a can of Coke? I probably wouldn't. Some of you will, and some of you do all the time. My overall portfolio, am I up today? Of course I'm up. There we go. I'm making money again. My portfolio is now at $131,440. That started with $5,000, so I'm making money. Are you? It's holding at 32. I'd be very, very happy with my profit. I don't care if it goes up now, if I was in it. Now, adjust your stop trail order. Adjust it. If you were in with a 1%, you can cancel and now set a 2%. So that way you stay in the flow. Change it. If it moved to 36%, you can set it to 3%. That way you'll remain in and keep your money, allowing you to be in the volatile action this morning without coming out too soon. Let me check the volume. For Rocket Lab, we are going to stay on this stock. This is, I am making this video live. Let me have a look. Let me refresh the volume. Keep my eye on it. The volume at the moment is 15 million. It's the average. 35%, 34%. Not doing a lot. Bouncing around. 36. Now you can set your stop trail order. It's holding quite nicely. So if you're in at 33% up, if you bought this morning, you can set that to a 3% now. At least you're guaranteed you get your money back if it does drop. But it could keep running as it is running. 37%. Let's watch it. Let's stay with this just for a few moments. We're not going to stay with it too long. I'll tell you what I'll do. I'll end the video here, but I will stay live with it. So there we go. As we end this video out, join us live. We're live 12 hours a day. Here investing, and we hope you'll join us. Click above my head for all the links down below in the description. Over here, I'll put the full playlist for Rocket Lab. You can check out all my analysis over the period of time. And down here, you can look at my Alpha Spread playlist, which is I've reviewed over 200 stocks. And I've also got a playlist called Donald Trump Trades, 19 trades, 19 wins. You might want to go and look at that as well. Until next time, as always, take care of yourselves and each other.